In today's episode, I'm going to interview one of my students from Warrior Trading. His name is Justin. He's a day trader from Minnesota who focuses on trading penny stocks. And when he started trading, he was focusing on hitting a $5 daily goal. That's it, $5 a day. It's less than you would make working at a gas station, working at Walmart, working at McDonald's. But he knew something. He knew that if he could prove consistency, even with just $5 a day, he could scale that up. And guess what? Last year, he had his best year of all time. We'll share how much he made last year during this episode. Let me remind you, as always, trading is risky. His results aren't typical, neither are mine. My name's Ross Cameron. I'm a full-time trader, and I'm a mentor to beginner traders over at Warrior Trading. Let's go ahead and dive into this interview. What made you want to get into trading? Where did the interest come for you? Was this something you'd always been into, or did it just come as a spark?
Well, if I want to go all the way back, when I was a kid, during the dot-com bubble in the 90s, I remember my dad talking a lot about, Microsoft and Apple and all these tech stocks that were starting to, Yahoo and all these. And we would end up after dinner, a lot of nights we'd watch the nightly business report. I don't know if you ever watched it. It was just a
No
Channel
kidding.
2, Channel
Yeah.
2 program where, well, I don't remember what the guy's name was. But oh my, it was just a guy talking about stocks and the most active and ones that had the most volume, and it was just interesting to me, and I could tell my dad was always really interested in it. He just did it, as a hobby. It wasn't anything that he did professionally or anything, but that got me interested, and him talking about it certainly got me interested. And then in the kind of the early to mid 2000s, once I was old enough to have a brokerage account, I started doing. I kind of dabbled in some trading with 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 with
Wow. That
with no
is,
strategy. I mean,
yeah,
I
that's the
was I
same
was
as me.
fortunate enough that when, I went to college as well, but I worked 40 hours a week while I was going to
Okay.
college to help pay for school. My parents helped
Yep.
me at the time, and then I ended up paying them back what they helped me with eventually. But I was able to save some of that money too, and my dad had introduced me to stocks, so I was interested in trading, and I remember the first year I was active trading, it took like 300 trades, and I didn't make any money. I would just buy stocks and sell stocks whenever for no reason, really. Just it was kind of
Yeah.
like going to the casino, it was more of just entertainment at that point where I didn't really know what I
Hmm.
was doing, but I knew that there was a chance that I could make some money. I'm not gonna lie, it was, it wasn't smart investing, but what helped me stop doing that was when I had to do taxes. I had to handwrite all those. It was I don't know if there was e-filing or anything at that point, but I remember just
Yeah.
hours of writing out, the ticker and the stock and the cost basis and the proceeds, and I had to just write all that out. And I was like, oh my
Wow.
gosh, I'm never gonna do this again.
Yeah.
So that
Yeah.
curbed me from doing that anymore back then. So then I just did just longer term investing, blue chips, dividends, and that sort of thing. But that's kind of what
Wow.
got me interested. And that was just, I was doing different work. I worked in retail for 15 years, and then I worked in the building trades for about 10 years. And that was at the end of that building trades career is when I decided to start looking at something possibly different. Throughout my throughout my life, I've kind of had some struggles with mental health, and
Hmm.
it would kind of ebb and flow. Sometimes it would be more prevalent than others, and in kind of mid to late 2021, it started really showing itself, and
Yeah.
we had just had our second daughter, and I was just overwhelmed. I was getting more responsibility at work. I was didn't have any energy because I was just not in the best mood all the time, and trying to take care of the newborn and the 1 year old and be a good supportive husband, and just something had
Yep.
to give. So I decided to take a leave of absence from work and
Okay.
just kind of try to figure out what exactly um, I could do to be a better dad and a better husband. And
Yeah.
spent a lot of time in nature. That's where I'm at my best to do some thinking and some journaling. And just one day, I don't know exactly how it popped up, but I just thought about day trading. I just, I remember I was just sitting on a log in the middle of the woods in winter, Minnesota. It was in November, and day trading, I've heard of it before. I love the stock market. It's super interesting to me. So I came home and I told my wife, I'm like, what do you think about day trading? And I think at that point she was just excited to see that I had some excitement back in my eyes for something, because it was not the best time for our family. And she said, hey, you're got some time off of work, take a look into it and see what you can find. And that's when I stumbled upon warrior trading, and um, that's just when I started diving in, and from then on I just made it a focus to really try to learn it. At first
Yeah.
I tried to take shortcuts. Obviously I thought it was just going to be easier than it actually was, but quickly realized that I needed to get some actual education. And when I saw your YouTube content and your morning shows, I thought that, this is a guy that really wants to help people learn. He's genuine, and he definitely knows what he's talking about. So I kind of just leaned
Yeah.
into you, because
Yeah.
it's hard to find genuine people in this world a lot of
Yeah.
times. And when you do,
Yeah.
you really have to take advantage of that, and really listen to them. So yeah.
Man, and I love being able to send the ladder back down because I was in such a similar position, you know, learning about the market during the dot-com bubble, funding my first account in the 2000s with Ameritrade. That was even before they were TD Ameritrade, they were just Ameritrade. Taking those first couple trades, trying to figure it out, didn't have enough money, didn't have any strategy, didn't know how to get started, went back to working regular jobs, pumping gas at the gas station, dealing with anxiety, dropping out of college, father dies, going through all this stuff. And trading came to me as like, this is something that it works for other people. And this is something that would work within the somewhat limited confines that my mental health has created in my life right
Sure.
now. And I don't need to get rich. I just need to make, couple hundred
Right.
bucks a week, 500 bucks a week, 1,000 bucks a week, maybe, and live it in Vermont. Just not much
Yeah.
different for you. Probably living, where you are in the Midwest. I mean, cost of living's a bit lower. I mean, winter heating,
Sure.
everything else. But aside from that, it's not so bad. So it's like, if I can just get by, that's enough for right now. So then you get into the market. You've been working for a long time, so you've got some money saved up. So what kind of account size did you start with? Did you like right away set up like a $25,000 account, or did you kind of just throw a
Um,
couple thousand
I
dollars in an
had
account,
I
or
had
what did you
already
do?
had a decent sized brokerage account that I had set up kind of as a retirement. It wasn't an actual retirement account. Had I
Okay.
been a little bit more, a little bit smarter before, I probably would have put more money into an IRA. But I put it into a brokerage account, and then I invested that money myself. So I just basically used that account. It was like $100,000. I certainly
Wow.
wasn't trading with $100,000. But that's kind of the account size. And that's at the beginning when I was like, doing some silly things. Like I'm trying to scalp QQQ with 2,000 shares. It's like, what am I doing? This doesn't make any sense. I
Right.
gotta limit
Yeah.
my
Yeah.
I gotta limit my account size so I can't do these bigger losses. So what I ended up doing is I opened another brokerage account, and now what I do, and that was like I usually try to keep it about 25 to 30,000, maybe about 30,000,
Okay.
not just to like 5 grand over the PDT.
Yeah.
And now what I do is I only keep about 10,000 available, and I put 20,000 in CDs, so certificates of deposit, to hold the PDT position. But then I'm not allowed
Yeah.
to use those $20,000. And when I take trades, I very rarely, I'm trying to increase size a bit, but at this time, I'm not taking very often bigger than $10,000 of a position.
That's really interesting. That's a really smart way to do it. So you, I mean, you've got the 25,000 in there, but you've locked up
Yeah,
half of it in
correct,
CDs. So you're getting interest, not a lot, but you're getting some interest on it. And you can't exceed your now $10,000
correct.
buying power. So you're mostly trading lower
Yep,
price stocks. Everyone knows you in the community as Justin, J-Core. Of course, we got a lot of Justins
That
in
is.
the community. In fact, if you're born Justin, you've got a 50% chance of becoming a day trader. And I'm almost certain that that's a
And
true statistic.
80% of being a
So
penny.
is it 80%? 80% chance of trying, 50% chance it's going to work well. No, but in all seriousness, you're known for being a penny stock trader. So how did you go from, I mean, I'm not really a penny stock trader. That's not really been my focus. I mean, I know about penny stocks. I traded them a little bit. I didn't find a lot of success with it. So how did you gravitate kind of down to the very, I'd say, bottom of the barrel?
I mean, that's the thing is the penny stocks and these stocks that continually do reverse splits, they are the bottom of the barrel. And
Yeah.
that's what makes them so volatile. If there's any hint of good
Mhm.
news or if there's any hint of a bottoming pattern on a daily chart, there's gonna be some shorts in there that want to get out.
Yep.
But to what kind of gravitated me to penny stocks is, like I said, in the year 2022 was kind of a trial and error year. And towards the end of that year, I looked at, ThinkorSwim has a report where you can look at all the tickers you traded and then your year-to-date profit and loss on the ticker. And I spent some
Okay.
time. I don't have TraderView or anything. I don't track my metrics. I keep a mental log and I have an Excel spreadsheet with some information. But I look to that
Okay.
report on ThinkorSwim quite a bit just to see what stocks I've been doing best on and what stocks I've been not
Yeah.
doing well on. And it ended up being that throughout 2022, the most consistent trading stocks were penny stocks. And I kind of just tried to figure out why that might be. So then I started trading them a little bit more. And I just didn't feel as anxious. Like, you talked about mental health a little bit. Well, yeah, anxiety is something that a lot of people live with. And I just felt
Yeah.
comfortable trading penny stocks. And when I felt comfortable, I wasn't making decisions on emotion. I was actually trading a chart and trading price action rather than trading my emotions.
Mm. Now I'm going to switch to the whiteboard here for
Sure.
1 second because we were talking earlier about
Yeah.
spreads. So when you have a stock that's $1 a share by anything above $1, trades in a spread of
Yep.
1 cent. So $1 to $1.10, the stock would go up 10 cents. So there's only 10 increments all the way between $1 and $1.10. But what's interesting, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Between 90 cents and $1, how many increments are there? There's actually 1,000. And there's 1,000 because below $1, stocks trade down to the 1/100th of a penny, which is crazy. But what that means is that if you buy 10,000 shares of a stock at $1.05, there's no way you could be risking less
Correct.
than 100, because if it drops a penny, you're down $100. If it drops 5 cents, you're down
Yep.
500. But if you buy 10,000 shares of a stock at 95 cents, you could set your stop at 94,999, right? It was 94.99. So now you've got all of a sudden potentially only $10 of risk.
And that's
So you're taking the same position, but you're risking a tenth of the amount.
That's it.
And of course, then if you get a 2 or 3 cent pop, you're taking $10 of risk to still make potentially upside at
Right.
200. So now you're getting a risk reward that is much more in your
Yeah,
favor.
so that's 100% what it is you can find hidden buyers, you can find big buyers at those whole pennies and use that as a stop. So yeah, you take a 10,000 share position at 95 cents, like you said. A lot of times when it breaks, it doesn't flush all the way. Like sometimes it'll flush, pretty quick. But a lot of times it'll kind of trick down to like that 24.99 or sorry, 94.99 and then maybe 94.50. But typically it doesn't break below more than half a cent. So that's what became attractive to me is, yeah, like you said, I mean, I could take a position at $1.01 or $1.01, but I'd have to risk a penny. That would be the minimum risk. Where under that dollar, you can risk, like you said, under, about 1/100th of a penny.
Yeah. Yeah. Now, for me, one of the things that I've also noticed is that a stock can move a lot faster when it breaks over $1. You all of a sudden you get squeezed from $1 to $1.15, $1.25, $1.35, $1.50. We're at the half dollar. All of a sudden, $1.65, $1.75, we go $2. Stocks go so much faster from $1 to $2 typically than they go from like 50 cents to a
Yeah, I
dollar.
agree.
So for me, I focus a little bit more on capturing bigger cents per share. Um, that might be partly because in order for me to make $30,000, have a really nice green day, to do that with a penny stock, I mean, how many shares do I have to buy at 50 cents a share? Half a
Yeah.
million? I mean, we're talking, and
Oh, yeah.
people do it, but these are big positions. Now you catch the misfortune that all of a sudden there's a liquidation event or there's an offering, you could lose 50 grand, 100
Yeah,
grand.
no, there's definitely a threshold to how much money you can make doing the strategy that I have. I feel like there's still significant amount of room for me to grow with how I'm trading.
Yeah, I think there
And
is.
last year was, more money than I ever made in any other career in a year. So,
Wow.
um, I
You want to share how
200
much it
grand,
was?
209,000 last year is what I made trading.
Wow.
So, and the year before
Wow.
that was 78,000 in 2023. So,
And 2022 was your onboarding year. That
2022
was your
is
beginning
more or less break even.
trial.
Um,
Yeah.
so yeah, and that's the most money I've ever made in a year. And this year started off better than last. So, knock on wood. Hopefully the market continues
Yeah.
to be good. But I,
Yeah.
I what I want to do is just continue to grow it. But like you said, the stocks over a dollar definitely move faster. I would say that
Yeah.
I don't necessarily like trading the super fast action. I like to
Mhm.
scale into a little bit slower moves. So not
Okay.
necessarily the high a day break where it instantly jumps
Yeah.
breaking news. That's not really my
Totally.
style, and that might be somewhat due to the broker that I use with ThinkorSwim versus using Lightspeed, where it's not quite as fast.
Maybe.
But what I've
Yeah.
found is that I can build into a position. So we talked about taking the 1/100th of a penny of risk. Well,
Yeah.
I'm not necessarily looking for a quick jump up of 2 cents or 3 cents. I might be looking for a continued curl. A lot of times that position
Okay.
I'm taking is at kind of usually like a higher low where you're trying to break a downtrend. So I'll take that as my starter and then I'll continue to add into that curl until I get to like a
Okay.
high a day or a pivot, and then that's usually when I'm scaling out.
Okay. So let me jump back on the whiteboard here for a second. So then you're looking at a stock that has already made a
Yep.
move. It has to have already started moving, right? And then you let it pull back, and then it makes a pop up off that level. It makes a low, but it's a higher low. So then you're buying off of that either double bottom or just that it's now showing that it's an ascending support level and it's beginning to trend back
Yeah.
up
So after like
for a
it'd be more
curl.
after kind of a longer downtrend. So you might have
Oh,
a
okay.
nice 100% squeeze on something, and then you'll have a,
Yep.
30-minute consolidation with the downtrend. And then, so, at the top of that move, shorts are loaded in that stock.
Yeah.
So they're going to wait until they have any reason to sell. And they really don't have a reason to take profit until that downtrend breaks. And that's when that you see that first higher low set like on the 5 minute. And that's where
Yeah.
you can take that 1/100th of a penny risk on that pivot low, or
Mm.
that pivot low that's higher, and then you can add into the next higher high that it makes, and then now you're getting a downtrend break where shorts are thinking, okay, well, we made our money, we'll take profit, and it's just a smoother move for me at that point. Now I can scale in
Yeah.
where I know more traders agree that it's time to buy longs, and shorts are saying, okay, this is a good spot to buy.
Mm.
So it just gets a little
Yeah.
bit smoother move at that point. But then what I focus on now is once it gets back to that high a day, I kind of just hands off it, because at that point, then you got the shorts trying to reload, reposition, you got longs taking profit, and it just kind of gets choppier for me at that point.
Yep.
It's that nice smooth curl
Yeah.
move that I like a lot, that I really try to lean into and scale and take bigger size of.
Interesting. Okay. So how long would you say your average trade is? Do you have an
Um,
idea?
they're still pretty quick. I'd say probably about 1 to 2 minutes.
Oh, okay.
Fairly short,
Yeah.
but a little bit, maybe a little bit longer than some scalpers. I do take a lot. I do also take quicker trades on that. What I'll do is that usually that first trade that I take on that downtrend break is going to be the longer one. And then once I scale out of that position, if the stock continues to go higher, then I'll be doing more, rapid hyper scalping type trades where I'm just focusing on the level two. Um,
Yeah.
but that first trade that I like to take is that first curl, and then the continuation after that is when I would start taking quicker trades.
So you really need the commission-free broker, both because you're trading with bigger share size and because you're moving in and out.
Yeah, I definitely move in and out a lot. At least probably at least 200 trades a day, I'd say, is what I'm taking. Sometimes quite a bit more than that too if I'm really active and something's really doing well. Um, but yeah, I don't take huge size. I'm working on sizing up. I think right now the biggest positions I'm taking is like maybe 15,000 shares on a penny stock, which is
Okay.
better, which is more than I had in the past. And I'm trying to slowly increase that
Yeah.
because last year was
Yeah.
really good, very, very consistent. And, I want to challenge myself to try to continue to improve.
Yep. Yeah. Yeah. No, I mean that's the way to do it. You just continue to kind of push the edge of your comfort zone a little bit, take slightly bigger size, then you acclimate to that new level, and then you just keep doing it. So it's like every couple weeks. It doesn't have to be like I got to wait till January. As long as you're doing well, every couple weeks you just bump it up a little bit, bump it up a little bit, and then pull it back if the market gets cold. Because that's the thing. If it does get cold, you might have a hard time with that size. So just bring it down and then sort of find your new resting point and then scale back up when you get into that
Yep.
next hot
Yep.
cycle. So walk me through your process each day of how you come up with your watch list of choosing stocks to trade. What's your system
Okay.
look like?
Yeah, I have mostly use Warrior scanners. I usually sit down at 6 a.m. Central Time, so like 7 a.m. Eastern,
Okay.
right when Schwab is able to take trades. And I don't trade a lot pre-market because ThinkorSwim's pretty clunky pre-market without
Yeah.
offsets on limit
Yeah.
orders. But pretty much for my watch list, that's kind of where I'm finding the stocks. I'll see the top gainers. I'll look at continuation stocks. I have a whiteboard. I put stocks on that are from previous days, that I'll check in the
Nice.
morning to see what their daily charts are looking at. Look at some longer time frames. Is it still a bullish chart? And then what I'll do is I'll try to focus on maybe two or three, and then I'll just kind of dial in on the level two. I'll really stare at the level two and see, is this something that's trading predictably? Is it trading cleanly? Are bids actually getting sold into and then breaking? And
Mm.
the sellers getting bought up and breaking? Are there hidden buyers? Are there hidden sellers? The level two is really the heart of the trading that I do. Is you need to make sure that the level
Yeah.
two is really true to what you're trading. Otherwise, you're just going to get chopped up, pretty
How did you get good at reading level two?
practice, a lot of practice.
Yeah.
I, I,
Yeah.
I still sit, I'm in front of my computer a lot. I'll take
Yeah.
small breaks. I do a lot of projects at my house to kind of get me away, but still also be near my computer. Something starts
Yep.
moving. Um, but just watching, I mean, hours of level two every day, especially under $1. I mean, level two is just a lot
Mm-hmm.
different than it is above a
Mm-hmm.
dollar. It's just harder to, I don't know if it's harder, but it's definitely looks different than over $1 with the extra
Yeah.
decimal places. Um,
Yeah, I find it the same that it looks different under $1, and it's a little
yeah,
hard
no,
for
yeah,
me because
it's
I'm not as used
yeah.
to that.
And I'm very good with numbers. I went to college. I have a degree in mathematics. So I've
Okay.
always liked numbers, and I always liked finding number patterns. And I really just enjoy finding those hidden buyers and hidden sellers and knowing when
Yeah.
those break, you know, what's going to happen, and really, just kind of dial in on that. But just a lot of time watching level two is really what it boiled down to. And it took a while. At first I didn't even know what it was. I started trading. I was just looking at a chart and I'm like, what's this thing that's blinking
Mm.
down here, And you start out, you don't
Yeah.
really know. But as I started trading more, I learned that that's a really good tool to have. And there's a lot of information just looking at that level two.
Do you have preference on float when you're trading penny stocks?
I do. I will trade any float depending as long as the volume's there. You know, it's kind of a volume to float
Okay.
ratio for me. Does this
Okay.
does this stock have the potential to rotate its float today? It's kind of a question that I ask. So if it's a 100 million share float, because it can at least have 100 million shares of volume. That's kind of what I'm thinking. My
Yeah.
preference really, I like kind of like the 10 million to 60 million, a little bit higher. I tend to find that
Mm.
the bid moves a little bit better with the ask on the higher float stocks. I know some of the lower float
Yeah.
stocks, the ask will get, will start running, but the bid will just stay where it's at.
Right.
So I kind of like a
I've
little bit
seen
higher
that.
float, but not too high. So that 10 to 60 is kind of my sweet spot.
Yeah, in that lower price range, I feel like you kind of need you need more orders to fill out the book because all of a sudden, sometimes I'll notice a penny stock will have breaking news and it'll go from 50 cents to 75 cents real quick, and then comes right back
Yeah,
down.
yeah,
It's like the ask went up, but the bids didn't really fill it
exactly.
in.
Yeah, you'll pull it up. I'll pull up a breaking news penny and I'll see it at 50 cents, and then I'll see the chart spike up to 75 on the ask. Bid doesn't even move. It's like, well, I wouldn't have had a chance to trade that. If I tried to trade that, I just would have lost whatever it
Right,
would have been. So making sure
right.
that there's the liquidity to be there. And that's a lot where waiting for a nice pullback, watching the level two, getting a feel for the level two, because every stock's a little bit different. You can kind of get a feel for it by watching it and just seeing, how it's actually trading. Um, that's kind of what I'm looking at. But that extra, the higher flow, it seems like it tightens up the spreads quite a bit too.
Yeah, yeah. I mean, it does for pennies, and it does for the dollar and up as well. The problem with a dollar and up is that the orders get sort of fill in at each penny because you don't have fractions of a penny. So then it becomes very stacked, thickly
Yeah,
traded, and it starts to move really
yeah,
slowly. So it's like there is kind of a sweet spot in float and volume based on the
yeah,
price, right? The lower price, you can tolerate a little bit higher float and a bit more volume, and that's not bad. But when you start to get more expensive, higher float can just make it really congested, and then they don't pull away, they don't
yeah.
move.
All those buyers and sellers just have to stack at a penny when you get above a dollar, and they can spread out,
Right.
a little bit. So you'll see a lot of times I'll look at some of these stocks and the chart pattern will be smooth, and then it'll get to a dollar, and then it'll kind of barcode because, like you said, it gets congested.
Right.
So the
Yeah.
volume's still there, but the price movement's not there anymore because it doesn't have the fractions of pennies anymore.
Yeah. So you're using ThinkorSwim, right? You're not using a third-party integration, just
Yep.
trading on ThinkorSwim. And do you use hotkeys or mostly point and
Just
click?
buy market, sell market during market hours, and then I'll in the morning, but pre-market and after hours, I'll buy, ask, sell, bid.
Okay. How much are you trading pre-market versus regular hours?
My goal pre-market is to get, you know, like a 25% cushion up, to my daily goal. So I'll try to get like about
Okay.
$100 is kind of what I'm shooting for, because that
Okay.
having that $100 cushion or little cushion going into the open makes me feel more comfortable taking a nice trade,
Yeah.
5 or 10 minutes after the open, where if I take a loss, then I don't feel quite as bad about it. But I know I'm not going to be able to make a ton of money. Sometimes I've made, over $1,000 pre-market, not very often, but sometimes
Yeah.
the stock will be moving really well and I'll be able to get dialed in with the level two and do well on it. But a lot of times I'm just trying to get a little cushion so I can feel more comfortable when the opening bell hits and I can start
Yep.
using market orders.
Do you know about your accuracy or how many days out of the typical month you'd be red?
Last year I had 7 red days. The
See, that's what
the
I was
whole year.
wondering. Yeah.
7 red days last year. And yeah, I mean, super grateful for that. But that's because I like starting very, very small. Like if it's the morning and I'm down $50, I get a little irritated because it's just like, I don't know. It's just I don't like to start the day like that. So sometimes I'll even have to walk
Right.
away with a small loss even like that. Um,
Yeah.
so I really like to have a cushion, and I really don't like to go red at all. And sometimes it's a hindrance. I mean, it slows me down
Yeah.
sometimes, but it's also
Yeah.
something that keeps me from spiraling, because that's what happened when I originally started trading. Was it would just continue to spiral. As soon as I would go red, I'd just kind of lose control. So now what I have to
Yeah.
do is try to maintain staying green. And I definitely have had some swings down and swings back up where I've been able to finish green. But I just like being able to stay in the green. And if I get down to being up like only $100, I probably won't risk as much as I would have if I was up $500, because even though maybe I should, maybe there's an even better
Yeah.
setup, but I'm still, nervous or hesitant to take it because I know I don't want to go red if it doesn't work.
Show me that note card that you have on
Yes,
your
you're
desk again.
right. Right here.
Yeah. Not losing money more important than making money. Survive till you thrive. So yeah, as soon as you started talking about sort of the position of the daily goal, I was like, okay, you're thinking about this very similarly to the way I do, and it's a very risk averse kind of mindset, almost a mindset of scarcity. Like I don't want to lose, I don't want to lose, and that fear of loss, it's that's an emotion, and then we take actions to avoid being in the position of experiencing that fear, right? So the way I've kind of approached it, last year I had the fewest number of red days that I've had in my career since I've been tracking red days, which is since 2016 that I've been tracking. I had
Oh,
24 red days, so 2 a month, which you have me beat by quite a bit. But nonetheless, 24 is pretty good. I had other years where I had 48 red days or 50 red days, and I still had a good year. It may be even a better year actually than last year. But
sure.
nonetheless, 24 red days. And that was the result of having implemented a new position management strategy in June of last year, where I said, I'm not going to take full size until I first have a cushion on the day of about 25% of my
That's
daily
almost
goal. I'm going to focus on building the cushion. And if I don't get the cushion, I'm never going full size. But most days, there's enough opportunities that even if I go red with small size, I can recover back to green. And those end up typically being small green days. I never get enough of a cushion that's a big green day. But the result is that I have small green days. I have some small red days where I just kind of run out of opportunities. Or it's like, shoot, it's 11 a.m. and I got to get ready to go pick up one of my kids. And I'm out
Yeah,
of
you don't
time,
sit. I sit here I'll sit here. I'm super stubborn. Like even if I'm down like $50, I'll sit here and I'll just wait. I'll
You keep
just wait
fighting
for
it
that.
out.
I'll just grind it out until I can say, okay, I made a little bit of money today, and maybe and being okay with some of those smaller red days is something that I don't know. I mean, maybe I should be more comfortable with, but at the same time, it seems like it's kind of something that keeps me. I'm not exactly sure how I would describe that, Ross.
Well, if you can avoid the biggest trigger is if you start revenge
Correct.
trading. Because if you stay with small size, I feel like I sometimes say it's the losers who keep fighting it out, like through the midday and afternoon, because you start seeing this erratic price action where you can almost see that people are throwing, like they're getting sloppy. They're throwing these Hail Mary passes. You know what I mean? It's like the fourth quarter of a football game and the team's like all of a sudden starts falling apart. They start getting desperate, and then they throw an interception, and then throw a second interception. It's like, oh my God, you guys are crazy. What is happening? But it's like that desperation starts to kick in. And that's when in the market, I start seeing these big whips, like this big pop where everyone jumps in, like, here it is, finally, my Hail Mary. And then it flushes back down. Everyone bails back out. So the revenge trader is like taking increasing risk on every one of these trades and is hoping for that desperate Hail Mary attempt to recover their day. Whereas if you're actually holding the discipline to keep yourself at small size and you're like, I'm just going to sit here until I'm recovered this $50 and I'm green 50 or $100, then you're not revenge trading. I mean, you are definitely being stubborn. And at the end of the day, being down 50 or $75 shouldn't really
No.
matter. But, so maybe that is something to focus on. And I do feel, as you indicated for yourself, that this aversion to risk and loss does hold me back at times. It's like I could have been more aggressive, but I decided to get conservative because of sort of where I sat on
Correct.
the day. And that can kind of get into trading your P&L, that number. You get sort of fixated on that, which I sometimes envy people who are sort of free from that burden. But on the other hand, being so fixated on the numbers keeps you with a very clear goalpost of what you
it
need
it,
each
it
day.
makes that P&L curve nice and smooth. That's what I
Yeah.
like to see. I emotionally can't handle huge swings. I just can't do it. That when I first started
Totally.
trading, I found that out really, really quickly that I just emotionally can't handle this. I mean, when I first started having those swings, I mean, I had a rubber mallet in my laundry room where I would have it and I would beat it on the floor. Like I would get so mad, Ross. Like I'd take that rubber
Yeah.
mallet and I would have
Yeah.
to beat out some steam because I get so frustrated with myself for not controlling my
Yeah.
emotions. Not that that was emotional
Right.
control, but uh,
No, I hear you. I mean, I've been there too. I used to hang a series of belts, and I'd be like, "All right, which belt is it going to be today?"
yeah,
I'm just kidding, but I dealt with a lot of that same stuff of just feeling this real anger and this just huge emotion from being on that roller coaster, and that was where I was like, "All right." On the one hand, net net, at the end of the day, I was still making money on this roller coaster, but I was like, is there a way that I can achieve a similar result? Or in fact, maybe I'd be okay with achieving a little bit less if I could just do it more
exactly.
consistently.
And that,
Like that and that's even like on an investing side. I've put a lot of my Roth IRA profits into fixed income. And some people are like, why would you do that? You turn $600 into all this money, then you put it in fixed income. You should put it all in Nvidia, put it all in Tesla. And it's like, I just can't handle a roller
I
coaster. I just want to see that each month, that $8 million is putting out $80,000 of fixed income. 1% a month is kind of that's high, but 6%, 7% over the year. Look, I don't
agree.
need more than that. I'm okay with less as long as it's
Right.
more consistent. So that requires taking a little bit of a different approach when it comes to share size. And you know what, especially when you're a
Yeah.
dad, because that's the thing. Like, if you want to be able to bring your best self later in the day, when your kids are home and you're reading books, it's hard to do that when you're dwelling on this stupid trade
Yeah.
you took, because it's like a shadow that's just over you for the rest of the day.
Yeah, I mean, and then when you're doing silly things, sometimes you starting out, I had a tough time looking my kids in the eyes. It's like, man, what did I do today? What kind of am I just a gambling addict? I need to make sure that I'm controlling my emotions because I need to provide for my family and set a good example for my kids. I don't want them to, a lot of people think day trading is gambling. I've proven to
Yeah.
myself and my wife and some of my friends and my parents that it's not if you do it right, but it certainly can be. So I don't want my kids to think that. I don't want them to hear
Yeah.
some of this stuff and think that that's what I'm doing
Yep.
all day is gambling.
And that's that fine line where you could be in control and then you hit that trigger. You get triggered. And I mean, for me, I've had sometimes getting triggered, it happens so quickly that all of a sudden it's like I've crossed the point of no return and it was so sneaky. I didn't even
Oh,
realize it happened. And then suddenly I've given back, you know, I've gone from daily goal to max loss and I'm now swinging for a home run. I did, typically if I go from daily goal back to down less than 25% of my goal, I should just stop trading, preserve the profit. But I actually went red. And now rather than go back to trading with just quarter size, I'm still trading with full size. And it's like, whoa, this happened quick. And that's why for me, kind of like what you're doing with the CDs, I put guardrails on my account with my broker. I call them and I say, hey, if I cross these thresholds,
yeah.
lock me out. Don't let me trade. Max, these are my max share size. Because I don't want to say that I don't trust myself because I generally trade within the guardrails and I'm not stopped by the hard guardrails. But I also just, I know that those
Oh
triggers are
yeah.
out there.
They
And
could sneak
and they've gotten traders better than
they
me.
sneak up on
So,
you. They
I've got to be
sneak up on you
careful.
and it happens really fast. Happens really
Yeah.
fast, where
Yeah.
you're at your daily goal and you fall a little bit below your daily goal and now you're break even and now you're small red and all of a sudden you're max loss. It happens just like that.
Mm-hmm. Mm-hmm.
Absolutely.
Mm-hmm. So, for a beginner trader, what words of wisdom would you share for someone who's kind of, at the beginning of their learning curve? I sent the ladder back down to you. Now you send the ladder back down to the next person. What would you say
Just
to them?
take it slow and don't expect to make any money for a while. if you're gonna try this, I feel like you almost have to be in a financial situation where you can go a while without making income. Like for me, my goal was a year where I felt comfortable with the
Mhm.
amount of money that me and my wife had saved up, and she also has an income coming in. But just taking it
Yeah.
slow, you know, not losing money is more important than making money. Just try to prove what you're doing is working and scale up from that. But
This is a career survive to thrive. You keep your head above water and it's just treading water. Being a break-even trader is actually a huge achievement that a lot of people dismiss. But if you're break even, you're not losing
correct.
anymore. So you're trading every single day, you're making progress. You take 2 steps forward, you take 2 steps back. Because by default, most beginner traders when they start are losing. So if you've stopped losing and you're just holding your own, that is progress. Now, I know that's not the glamour that you might be looking for, but that is progress. You keep working on that, you keep gaining experience, you keep improving your intuition, then that's when you start to fly
Yeah, like
away.
when you tell some people that you're started day trading, they're like, "Oh, you're gonna be a millionaire by the end of the year." It's like, no, it's not the right mentality to have with trading. Don't think you're just gonna be
Yeah.
rich because you're a stock trader. I guess
Yeah.
it depends on
See, I didn't want to tell people I was a trader. I just told people I
a
was a stripper.
stripper. Yeah, that's one good game.
Anything's better than telling
Oh
people
my
you're a
God.
trader. So much judgment comes. You tell someone that you're a trader, and all of a sudden, what are you going to get a BMW? You're going to start slicking your hair
You're
back.
gonna wear a suit
I
to
just,
work. You're gonna sit at your desk in a suit. Yeah. No, but yeah,
I know
it's
it's
trading.
hard.
It's what you want it to be. I mean, for me, I just want it to be a consistent income source where I can work throughout the day, Monday through Friday. I don't mind giving it 40 hours a week. I mean, I don't give it that much, but I enjoy it a lot and I enjoy
Mhm.
numbers and I enjoy watching chart patterns and I enjoy time to myself. So having that time to study and learn stuff from chart patterns and level two is fun for me. So,
Yeah.
and I just want it to be a consistent career. I want it to continue to work for me and my family, and I don't need to get rich quick. That's not my goal, and I'm just trying to get steady income.
Yeah. Yeah. I mean, I think that that's a good attitude. And I think for beginners, you know, if you can approach trading as this is a side hustle that I'm going to start spending time today. Maybe I should have started a year ago or whatever, but I'm going to start spending time today just getting a little more synced in with the market, listening to Ross's daily recaps, watching some of these episodes, maybe listening. You know what? You want to listen to one of the financial Bloomberg radio stations. Just kind of start to get a little bit more in the culture and learn the language and the terminology and and be willing to explore this as like this is a hobby, and if I can make a little bit of money on it, that's great, but right now I just want to see if I can get better at understanding how this
Yeah,
thing works.
exactly. Yep, that's exactly it. Yeah, you can't don't
It's
just
tough.
jump in thinking you're gonna make money right away. Just take the
Yeah.
time to do it right. Get an education like from where you're trading, going through the curriculum. There's so much good information in there. And then just learning from people that have experience. There's a lot of people in the chat room and warrior trading that have a lot of experience and a lot of good advice and lean in and listen to those people that have proven that they can be successful at it.
Yeah, well, that's exactly it. And you've got your 250K badge, so people pay attention. They're like, "Oh, Justin, he's been here for a long time. We've got about like 150 Justins in the room." So they're like, "Which one's which?" "Oh, this is the one with the 250K badge. It's not the $1 million badge,
Yeah,
but it's the 250K
someday.
Justin." So I know but it's unfortunate because we've got 1 million Justin. So he's been doing
You
this
better
for a
you
bit
better pick it
longer,
up a little
right?
bit and get a 2 million so I can take.
I know he's been sitting at 1 million for a while. It is time. So you're creeping up on him, but those badges are helpful because then you get a sense of like, oh, that's who this is, and oh, they actually have made some money. Like this is someone that I maybe can pay a little bit more attention to. They're not brand new in their first week or whatever. So yeah, that's all part of kind of immersing yourself in the culture of people that speak the language. Because learning this is kind of like
Yeah,
learning a language, learning how to read level two, learning how the terminology, the charts, the technical analysis. And I would say for you, I mean, there's no way you could trade without level
no,
two. I mean, level
no.
two is critical. That's part of your
No, and
edge.
some people, and I use the ThinkorSwim level too. And from what I hear,
Yeah.
it's not very good. It's just I'm just used to it. It's all I've ever used, and it
You're used
works
to
for
it.
me. But
Yeah.
yeah, it's super important for me to have that. I mean, yeah, like you said,
Yeah.
I could never trade without level two. I don't know that I could trade without
Yeah.
it. It's nice to have a chart pattern for reference. It's kind of like your back check when you're looking at a chart. You know, the
Yeah.
forefront's the level two, and
Yeah.
then your chart's kind of your reference
Yep.
for making sure that
It's
just make
context.
sure you're in a bullish pattern if you're trying to trade long. You know, don't be trading on a bearish pattern or something that's got bad volume profile or anything like that.
All right, so for those of you guys who have been tuning in for this episode, I hope you have really enjoyed it. I hope you hit a thumbs up. I hope you subscribe to the channel, and you can learn more from Justin if you are a member of the community. So if you haven't already done a 2-week trial, come on over, do the trial, and then you'll be able to see Justin right in the chat room, side by side with me, all the other traders at Warrior Trading, and the other badge holders. So you get a sense of what we're looking at each day, what we're trading, and how we're navigating these markets. So thanks again for tuning in. And a reminder, trading is risky. Our results are not typical, so manage your risk, take it slow, and we'll see you back here for the next episode real soon.